Every day wake up before the dawn, trading the stocks instead of cooking on the raven flies, searching for success. No apron, just a new kind of stress. Chasing dreams in the city lights gleam. Numbers and charts is the new regime.
Welcome to my YouTube channel, Becoming a Trader. This is the first video in a series of masterclasses where I show how I approach different technical indicators and tools in my daily trading. The first video is an RSI Masterclass. If we look at the traditional way of using a RSI, we have the standard setup as the standard indicator in TradingView here. The chart is a Bitcoin USD. I'm just taking any random one from Rwanda, and we are on a 1 hour time frame. Those things are irrelevant to what I'm going to show you. But if we look at the standard RSI, this is a momentum indicator showing basically the strength of in the development of the price over the last 14 bars at any given point. We have an moving average for smoothing this momentum, so we can see those things. A classical way of looking at the RSI is that this area down here is considered to be oversold. That when price is down here, it has been sold. The asset has been sold too much. And the contrary up here, that when we're in this area is considered overbought. And we can expect a reversal. Now, I don't agree with this classical way of looking at the RSI, because when we look on higher time frames, on especially something like Bitcoin, well, we can see that the price can stay in those overbought and oversold areas for prolonged periods of time. Especially if we look on the very high time frames, we can see now that was too far back. Accidentally changed the chart. Here we are on Bitcoin again. We can see that the price can stay in those overbought areas for extremely long periods of time. If we consider the last bull run, we have from 5th of October until essentially 5th of October in 2020 until April 21. So we are looking at a 6-month period where we could be waiting for the return, looking at of reversal on the RSI. So I consider this very misleading. One of the traders I'm very much inspired by is a guy called Fiboswani. He works with an approach to the Fibonacci, not Fibonacci, the RSI, where when price moves above an area around 62, this can be defined individually depending on the asset we're looking at and the time frame. Or when we reach above 62, we come into a bullish control zone. And essentially, this price will remain in the bullish control zone until the RSI on that time frame drops below an area around 42. As we see here, we touch it, but over here we went below this area. Now, so we can say that this is a bearish control zone until we break into the bullish control zone. And so putting these boxes here can be a little bit misleading. Now we have this area of nothing in between, between 42 and 62, which is a neutral zone. I've found that working with those areas and those boxes confuses my eyes and the EMA that I don't use, so I have programmed my own version of the RSI, and I have removed the background. I have completely removed the oversold and overbought areas, and I have coded the line to change color to when we break into the bearish control zone, it turns red, and until we break into the bullish control zone, it remains red, and then it breaks green until we break into the bearish control zone. I love looking at the RSI this way, especially on the high time frames, because it really tells that we do have a bearish momentum. I am accidentally touching something with my hand, which is so it tells us that we are in a bearish control zone and we can expect more bearish momentum until we break up. And in this case, on daily, now on Bitcoin, we have broken into a bullish control zone and we are here. Now, if we're talking about the so-called overbought and oversold zones, as I said, I find them misleading and confusing, but I do have a, what I call an ultra bullish momentum zone that I believe, especially in an asset like Bitcoin, that when we break into what was called the overbought zone, well, I consider it a super bullish momentum zone. Therefore, I have highlighted it with a color. And as we see here, when we break above the 74, 75 area, we actually see price having an accelerated momentum to the upside. So we break into the highlighted blue zone here, and for as long as we are in that, and actually, even though momentum is decreasing on the RSI, well, on a daily, we keep pumping. And it's only after a retracement that we actually seeing ourselves flipping bearish on this zone. Um, so this actually tells me that when traditionalists consider the price overbought, well, this is where it starts to get really hot and we have massive movements to the upside. So the classic version of overbought to me is actually oversold. This is where we take off. This is where we have an extreme bullish momentum. And that's why I have highlighted this zone together with the color changes. Those are the most important things, in my opinion. I have put a higher emphasis on the center line, the 50 line on the RSI. Not enough people are paying attention to this, in my opinion. On super high time frames, it doesn't carry that much weight, but if we look at lower time frames, what we can often experience is that we are here in a bullish momentum. We are retesting the 50 line. We are not breaking significantly below it, but that is a reset of the momentum. And since we're in a bullish control zone, we actually get an acceleration away from the 50 line, which carries this move, specifically this move. We see something like this again over here, which gives us this move over here. So I think this is some of the true values of the RSI. And with the traditional way of looking at RSI, those things are ignored. Other tools I really love using on the RSI, more sig- most significantly and more tradable when we come down to a 1 hour time frame, is I love trend lines and trend line breaks on upside. I don't really like using trend lines on the price because they are prone to manipulation. Um, the RSI, and in many cases also stochastic, is actually showing what kind of energy is being put into the market. What are traders doing? What are the big money players actually doing? Um, so mm, I like to play with trend lines, and I especially like to play with breakouts of trend lines. Uh, we can have uh, the bigger areas over tops, and we can actually see that when we have respected this two tops and we break out after the breakout, we're getting a massive move. In this case, this is not the most beautiful example because where we really get the most hardcore effects is when we can have both a breakout and a retest. But if we look, here's a bearish version. We have a trend line with two touches. We have a break down, and that actually aligns beautifully with a breakdown down in place. But RSI is revealing this to us slightly before it actually happens, because it shows a change in momentum. It shows a difference in how the big players are playing the market. Hmm. But if we look at something like the classical divergences, then let me see, in this case, between those two peaks, we have a high that goes into a lower high. At the same time, let me just remove that. We can see that the price creates higher highs. That gives a divergence. Now, a lot of people will only attribute these away when it is in the so-called overbought, oversold area. To me, a divergence is a divergence. Because what this shows us is that there was a declining momentum, but we still set a higher price. It shows that market makers are in shifting their focus. It can still play out uh, against us, but this tends to show that it's a time to change a bias to the more negative side. Um, Now, divergence doesn't need to play out as just one divergence. We can have multiple divergence aligning. In this case, this actually turns into two divergences, the second one being quite as significantly higher on the price, but it is a two-step divergence. You can take those as two individual ones or extend them as I did here. Now, when we have something like this playing out, if we extend it as a trend line, well, what do we see here? We actually have a reaction. We have a peak, we have a trend. We could probably also have the trend line up here on the price, but as we see, the momentum declines on the trend, but price never reaches it. So therefore, I think we have a much more um, truthful showing of the trend and the energy put in market by looking at the trend lines on the RSI rather than price. Um, so we have all our different little trends that we can find different places. Now, this is a absolutely beautiful example. We have a trend working as support. We actually get, um, in this case, we have a few touches of the trend line. We are facing a rejection at the 50 line, but when we actually break the 50 line, we get a significant spike in price. We get a significant spike in price, and when we actually break the trend line, um, the prices decline. In this case, we break the trend line, we retest the trend line multiple times, and we have a rejection. So we actually have revealed from the trend line that we're going to have a continuous move down, which is supported by us being in a bearish control zone. As you see, we turn into a bearish control zone after this decline, as well as when we break up here, we get into a bullish control zone. So those bullish bearish control zones, they are another correlation that we can use in our read of the RSI. Um, so yeah, that is basically how I look at RSI. This was the first little video in this masterclass series, and there will be many more coming. See you.
From the kitchen to Wall Street, hustle. A new game, new rules, ready to tussle. It's a raven's flight from pots to trade. A new life, choice we all made. On the move, don't looking back in fright. From cooking meals to betting all day and night.